Hot diggity dog, welcome back, you guys. Welcome back to the channel. This is the Invested Dog, where we talk about all things finance, all things history that leads to every decision that we make in order for us to make the best financial I shouldn't say guess, but the best financial decision in order to make money. All right, let's go and get started. In today's video, I'm going to be comparing the two stocks, the two copper stocks. We're going to talk about Southern and we're going to talk about Ero. And I'm sure Ero is not a company that you guys know too much about. All of this information is either from Yahoo or from Google or from other publicly known platforms. So it's free use and definitely do your own research. But let's get started. So Southern is a mining company. Let me read you exactly who they are. So I don't give you misinformation. They extract, they melt, and they refine copper and other minerals. Why is that important? Because everything is related to minerals. Everything is related to copper. Every single EV car, every data center, AI center, all of that is going to go back into tie to copper. So Southern, they opened up today. Right now it's almost noon and it's May 1st. They opened up today at $168. That is a little bit pricey, but if you look at the year to date, and the year to date today, it's medium. It's not. You are kind of averaging your money. You are averaging your return. However, what I will say is that copper has significant potential upside compared to other precious metals. Again, with Southern, look at 135 days ago. Only 135 days ago, May 5th, or I should say 135 days ago, it was opening at $86, and right now it's at $169. That is a huge return, huge return. Okay, let's hop over to Ero. What is Ero? Ero is kind of a similar stock. Ero specifically is in Vancouver. It's a mining based company, and they focus on producing copper and gold and whatnot, other precious minerals and metals. Okay, Ero is not doing so good today, but let's just take a look at it. $25 it opened up today. It's bidding for. Okay, that ain't too good. That's not too good. Okay, that looks a little bit better. Year to date, that does not look too good. Year, okay. 5 years, of course. Okay. When you think about investing into stocks, you have to remember that you're not going to get rich in one day. You're not going to get rich in 30 days. You're not even going to get rich in, let's say, a year. This is a long-term strategy when you buy stocks. You want to look at how you are going to perform, how the stock is going to perform over, I would say, at least 5 years, 10 years. As long as you're making sure that you get dividends, trust me, you're going to be protected within the stock market. And that's just my opinion. But yeah, Ero is it's an interesting stock. I think it has potential. Let's look at the revenue versus earnings for Ero, and let's compare that to Southern. Okay, so let's start off with Ero. Ero's revenue versus earnings. In 2022, Ero, their revenue was Pretty decent, 585.77 million versus its earnings, which was 114.71 million. So that's a pretty decent sized gap. In 2023, it seemed like it was kind of stagnant. The revenue was 575.64 million, and the earnings was 111.44 millions. And in 2024, the revenue was 670, earning was 114. 2025, that gap grows bigger. The revenue is 670 versus the revenue, which is 114. That's a pretty big gap compared to the previous years. I wonder what made the revenue go up significantly higher than the previous 3 years that it was operating. If you know the answer, definitely comment below and let me know. And this is Southern. So let's look at Southern's revenue versus earnings. In 2022, the revenue was 10 billion versus the earnings, which was almost 3 billion. 2023, the revenue was again close to 10 billion, revenue was close to 3 billion. In 2024, revenue was 11 billion, we're rounding down, and the earnings was 3 billion. And then in 2025, that gap just widens just a little bit. The revenue was 13 billion and the earnings was 4 billion. So yeah, obviously Southern is bringing in significantly more. We're talking billions versus millions. And it's going to be a hard pick between which one is a better option for you to buy. Do you want one that is performing really well and has been consistently performing really well? Or do you want to go over to Ero and they're not performing as well? However, there is potential for growth there. So let me know what you guys are thinking about these stocks, and I will talk to you soon.